Hello everyone, this is Matthew Frailey, founder of Breakpoint Trades. Founded this website in 2003. We've been providing advanced technical analysis, market commentary, trade ideas, and mechanical trading algorithms like you see here for individual traders and professional institutions. And as I've been discussing, you guys should be checking out our KISS systems. Go to the systems section, go to KISS STS tables. When you go there, you'll be brought to a list of over 630 items. The KISS system is a proprietary trend following system. It is long only, but it has logic to go long intelligently, and then it sets a smart trailing stop that is constantly raised. It's basically able to capture all the gains in the market and a lot more in many instances with 1/5 to 1/10 of the drawdown. So instead of traditional buy and hold where you might go through 30% or sometimes 50% drawdowns like in a bear market, these KISS systems may only go through 5 or 6% drawdown, sometimes less. So when you go to these various tabs, there's a basket, which is on the website, various index ETFs, some major stocks. You can see what the current trades are up right now. Currently, UPRO's up about 24.6%. It went long on November 3rd. It's raised its smart trailing stop 10 times. You can pull up the live chart by clicking UPRO. And you can see it went long right here. You can see all the smart trailing stops. Current one is at 49.50. Trade is nicely profitable. And again, you can go to all these other sections, the Dow 30, all the Dow stocks. I mean, really nice gains here. Boeing's up 27.5% from the November 13th entry. And some of these top ETFs, SOXL up almost 90%. BULZ up 67%. Just amazing gains there. Again, it's only available on Breakpoint Trades. It's the KISS systems. Again, the mean reversion systems are these, which have been pretty not that active this year because we haven't had much volatility. But the trend following KISS systems are pretty amazing. You should check them out, and you should become a subscriber so that you can get alerted from whenever your favorites take a position. So you got to go to the favorites, and then you click the checkbox to read notifications. Again, you can't receive notification if you're not a subscriber. Okay, so click enroll. Our best subscription is our 6-month membership. Works out to about $50 a month. We run promotions now and then. That's the best one. Anyway, again, let's go and get started with this newsletter. This is the weekend newsletter edition where we cover the general markets in depth and we look at some of our trading systems. And it is Sunday, December 17th, 2023. This is our back-end recorder for our website, non-YouTube, where we provide the newsletters on these webpage newsletter formats. We also have our live chart yours. Anyway, I'm going to go ahead and get the recording started now. And these YouTube videos, the weekend analysis, tend to be quite comprehensive, usually about 40 minutes to almost an hour. Anyway, let's get started. Hello everyone, this is Matthew Frailey with breakpointtrades.com. This is first off, I hope everyone has had a nice weekend so far. Sorry about that. Moving my browser's kind of moving around here. Again, this is the weekend newsletter. It is Sunday, December 17th, 2023. Again, hope everyone has enjoyed a nice weekend so far. It's Sunday afternoon, about 3 p.m. Eastern Standard Time. And anyway, the newsletter is divided into 6 major sections. By the way, I did add a handful of new trade ideas. So those will be at the end of the newsletter, probably not for 40, 50 minutes from what I'm talking right now. You can skip ahead, or if you're a subscriber, you can, just go and look at our trade ideas. We've had some amazing trade ideas. That's also our bread and butter here. Not just our market analysis, not just our systems, also our trade ideas. Again, as far as the market, again, happy holidays to everyone. Thank you for all your support. We really appreciate it. And we really don't have any marketing here except some YouTube videos. If you can spread us word of mouth, that's how we grow. We really appreciate it. And anyway, as far as the market, again, as you know, market's in holiday mode. The Bulls have had the control of the football, using the football analogy since late October. That's when the market bottomed. Typical seasonalities played out. We've had the seasonal weakness from late July into October, which played out. And so far, we've had the end of year fourth quarter rally as playing out. Again, also what happened in early October or late October and early November was we had a rare breadth thrust signal, and that's obviously been playing out. The markets have just been screaming higher. Some indexes like the Dow Jones have only managed to have like 1 day pullbacks only. Um, and we've been screaming higher ever since. Again, I'm not going to overanalyze things. We're just going to follow the trend. Our KISS systems have nailed this move, as you've been seeing. Many of the index KISS systems went long in early November. A lot of individual stocks, a lot of them those are up nicely, and they're nicely protected with those smart trailing stops. Again, the market once again had a good week. The S&P 500 gained about 2.5%. Triple Q's Nasdaq gained 3.35%. The Dow gained about 2.9%. New all-time high there. And the Russell 2000 IWM has been outperforming, gained 5.5%. Remember, it underperformed almost all year, and so is playing major catch-up. And the small caps tend to do well this time of year anyway, seasonality. Okay. Also, we've seen a lot more participation in the markets, unlike what we saw early this year, where you just had a handful of stocks leading the market. Out of the 21 market sectors we follow, 20 of them were up. Only one was down. It was the drug sector. So broad-based rally. The strongest sectors last week for semiconductors and banks, up about 9.1 to 8.1% respectively. Those are big moves. U.S. dollar lost 1.25% for the week. It was almost down 2% at one point, intra-week lows. It bounced on Friday. We saw big drops in the 10 and 30-year Treasury yields. And for example, the 10-year is now 1.5 percentage points off the peak in late November. And that's one reason why the market is at such a big rally. I have to toot my horn a little bit. I called for a major intermediate bottom or top in interest in the 10-year Treasury yield in October, and that has played out, as well as a rally in TLT bonds. Good call by me. Again, got to stay humble, but that was a good call, I think. Commodities mostly up last week. DBC, the index, gained about 1%. Crude oil gained 0.8%. Copper, 1.6%. The other commodities were mixed, like the ags, stuff like that. Gold was up. It's only up 0.7% for the week. It had a big week the previous week, as you know. Silver added 3.5%. It's more volatile. And GDX, the miners, still managed to outperform gold, up 4.3%. Again, last Wednesday, we saw a further ramp up. Let's call it a melt up in the market that we've been seeing. The FOMC, dovish FOMC helped that. The Fed obviously didn't raise rates, but in their notes, they made it clear that they're looking at possibly 3 rate cuts next year. And the market went nuts on that. Now, quite honestly, if you held a gun to my head, I wouldn't be shocked if they start pulling that back a little bit, especially since the market's near new all-time highs again, and well, some of the indexes are. So, a couple things to watch, guys. The VIX, keep an eye on the VIX this week. There is some divergences forming. Bollinger Bands pinching there. So, move could come there. Again, if we didn't have Christmas coming, I would be a lot more concerned short term. That doesn't mean we can't have a 1 or 2 day pullback, okay, before Christmas. Realize that. If we don't see a pullback now, then it's likely pushed off until, after Christmas. Then I think we'll see some sort of pullback in January. All right, enough rant discussion there. Let's go ahead and move on. Item number 2 shows the index sector table, what transpired last week. Again, I already discussed this. You can see these nice gains on the indexes with the Russell leading up 5.5%. Out of the 21 market sectors, every single one was up except the drug sector. And it was up for the week, except Friday, the 0.9% made it go negative. Big gains in the banks, financials, semiconductors, home builders as well, with those declining rates. U.S. dollar down 1.25%. Again, it had a big bounce on Friday. It was down a lot more. Crypto's been weak lately. It had a big run a couple weeks ago, so it's been digesting those moves. Though the stocks have done well, like Mara, Riot, etc. Commodities mostly to the upside here, except some things like natural gas. Some of these ag areas like sugar, wheat, corn. Precious metals were all up, with GDX, the miners, leading, and big drops in the 10-year, 30-year yields last week. Big rally in the TLT 20-year bonds. Next, item number 3 shows the economic news calendar. So tomorrow, Monday, we have NAHB housing market index. Remember, the housing market's been kind of on fire again lately because of the declining rates. We'll see how that looks. Building permits, housing starts on Tuesday. And again, plenty of economic news here, guys. PCE on Friday, GDP on Thursday, all kinds of stuff here. Crude oil inventories. We'll see if that helps crude oil bounce or not. And let's go ahead and get started with everything here. So before we get into the heart of the newsletter, let's talk about these systems, the KISS systems. And again, I already discussed this in the opening portion of the YouTube video. But if you're not watching that for on the website, again, assuming you're a subscriber to the website, make sure you've set up your favorites. Go to Systems, click on KISS STS Tables, mark a bunch of favorites from these lists. Remember, you can also use the search box. You can type in any symbol or ETF you want. You click on the stars to highlight them, that sets your favorites. There's a favorites tab on the far left. You got to click that box to receive live alerts. And every time there's a new change to one of your favorites, there's a new long entry, there's a new exit, there's a new smart trailing stop, you'll get an email notification with a nice clean table. Very cool. Okay, comes shortly after the market close. By the way, guys, look at these gains here, and huge gains here. SOXL, now full disclosure, I'm not actually in this one, kicking myself. This thing went long on November 1st. It's up almost 90%. Again, that's a leveraged ETF, but that's a hell of a gain for the KISS system there. BULZ up 67%. But you know, Apple up 10%, Amazon up 12%, and you can see the number of stops. Some of these have risen their stops 7, 8, 9, 10, 12 times, which means those profits are nicely protected. Okay, great thing. Make sure you're utilizing this resource, guys. There is nothing out there like it. Next, item number 5 shows just some of these various baskets. So here's the NASDAQ 100. Again, whenever these rows are highlighted, that means there was a new entry or smart trailing stop that day. So these all had new smart trailing stops. This one's CrowdStrike. It's had 17 smart trailing stops generated, and it went long on August 21st. So it's been long quite a while, and that trade is up 68.5%. Look at these nice gains here. Again, you can't play all the stocks and ETFs in the KISS section, but you could set some favorites, play a handful of them, use it to manage 401k, stuff like that. Chapter 6, here is the Dow 30 stocks. Even the Dow 30, the Dow 30 stocks tend to be pretty boring. We all focus on NASDAQ and stuff like that, but there's some damn nice gains here. Look at this. Almost all the Dow 30 stocks, except for 1, 2, 3, 4, 5, 6, 7 are long. Things like Intel, Merck, PG, Verizon, they're not long. All these others are long. And some pretty damn nice gains here, especially Boeing up 27.5%, Nike, Home Depot, etc. Next, item number 7, this shows you the basket. It's a select basket of stocks. Again, it's up to you to utilize whatever you want to follow on here or set your favorites. Okay, let's go ahead and move on. But again, I'm really happy about this section, and early next year, we're looking to launch a major update to this area. I was wanting to do it earlier this month, but it's very complicated. We continue to run into a bug here and there, so we want to make sure it's perfect before we launch it. Okay. I know you're all excited for us to launch this. Anyway, let's move back to the general market analysis. So image number 8, this is the breadth thrust indicator. Again, Martin Schweig breadth thrust. You can Google that. But in late October, when the market was severely oversold, and we got that reversal, for the first week up, we had a confirmed breadth thrust signal. Pretty rare. That's when this indicator here, and again, it's all listed here. I'm not going to go over it, but it rallies from below 40% to over 61.5% within 9 days. And it did it in about 5 days, 4 to 5 days. So this confirmed, and the market has been a straight moonshot since. Next, image number 9. Here's the daily view of the 5 major indexes. Again, you can see they were below the lower Bollinger Bands 1 or 2 days there in late October. Everything was set up for a rally. We needed a spark. We got it with declining rates. Some comments by Janet Yellen, and it has been straight up move. I mean, the Dow pullbacks. Here's a 2-day pullback. Here's a 1-day pullback. Hasn't never even lost its 9 EMA. Shows you how strong this market has been, and the Russell has been really strong lately. We're been outside our upper Bollinger Bands here for 3 days on the S&P, 3 days on the Nasdaq 100. So we are getting pretty stretched here short term, guys. Moving on, chart number 10. Here's the Dow. Dow made a new all-time high, up 2.9% last week. This has really played catch up, and you saw the KISS systems are doing well on the Dow. Next, chart number 11. Here's a week. This is a monthly view of the S&P, up 3.3% already this month. Big gain last month. Just showing you this because nothing's changed from the big long-term uptrend from the 2009 lows. We're still in this channel. I still think over time, this may work down again, but we'll see when that is. Maybe it's next year sometime. Maybe it's after the election. Who knows? But anyway, we're still otherwise in this longer-term uptrend. When we do make a new high here, the MACD will be lagging. You can see how strongly the MACD is now lagging here. So unless the S&P goes into 8,000, there's going to be a divergence that forms. But again, divergence is not a sell signal on its own, as I said, but it is something to be aware of and monitor and tighten up stops just in case. Next, chart number 12. Here's the daily view of the Dow. Again, straight up moonshot essentially since that October lows. No RSI divergence, no MACD divergence. So it is overbought, but a pullback, you don't just top out here and go straight down. Okay. A pullback consolidation is likely to form some sort of fourth wave or, a bull flag, coil, something like that. Next, chart number 13, here's the Russell 2000. As you know, that has led late this year, and it lagged all during the year, forming an inverse head and shoulder pattern there in October to November. Hell of a rally, took out this whole huge consolidation range. Pull back on Friday, not surprising. It's had one hell of a move, but really good catch up. Chart number 14, here's a monthly view of the Dow, up 9.7% for the month. Huge rally off that beautiful support. Again, guys, this was just amazing support. It was resistance 2018, 2020. It then became support twice in 2022 and in 2023. So just absolute textbook technical analysis. We're now into a resistance area. This could be an area to pause a little bit, but over time, even if we pause here, I think it takes that out. All right. Next, moving on to the S&P 500 charts. Here's the weekly view. Finally clearing this resistance area. We were all expecting that, obviously. Next target would be the all-time highs. That's just a stone throw away, obviously. There is some MACD divergence, but again, that's not a sell signal. Next, chart number 16. Here's the daily view of the S&P. Again, after that 5-wave type wedge pattern we had in October, straight up moonshot. And again, we took out the July highs by quite a bit. We launched last week, especially on Wednesday on the FOMC. Doji on Friday, a little indecision and a slight pullback here on Friday. If we pull back below these dojis, that could set up at least a mean reversion pullback to the 5 or 9 EMA, obviously. Again, we are quite overbought here in the short term. RSI 14's up here at almost 79%. Chart number 17, here's the equal weighted stocks in the S&P 500. So instead of having things like, Microsoft and Apple that have, 7, 8, 9% percentage points on the weighting, everything's equal weighted. So all year, the equal weighted indexes lagged, and they have come roaring back since this inverse head and shoulder pattern. Look at this move up. In fact, it took out the July highs. This and the Russell, the Russell is kind of like the S&P equal weighted. A lot of smaller stocks, not of the big cap stocks. And so anyway, the point is we've seen broader market participation this fourth quarter. Chart number 18, I had to refresh this chart. Here's the daily KISS system for the S&P. You can see the nice long there. March into July, you can see the nice long entry there in November. You can see the current smart trailing stops up around 4,600, so nicely profitable. And it gives it some room not to be stopped out on noise. Next, image number 19. Here's the weekly view of the KISS system. We don't show these that often, but this is the weekly view. Again, it's obviously going to, it gives wider stops than the daily. By the way, I need to change this. Notice these still say DVT. That's the old acronym we used for smart trailing stop. We had changed it from DVT to STS. So I just need to go in there and change my settings here to, change them to STS. But anyway, you can see system, caught that nice long from 2020 into early 2022. It went long there again in early 2023. So actually better than the daily. And it's held this whole time. Well, it did exit there once in October, then it got back in. So then again, the stops are going to be wider on the weekly, 4340 versus 4600 for the daily. That should make sense though. Again, this is a weekly chart. These signals sometimes, last 1 or 2 or 3 years at a time. So these don't trigger very often. Whereas the dailies indexes maybe anywhere from 4 to 6 times a year. Next, chart number 20, here's the 4 time frames. Here's the daily. Again, I'll keep pointing this out like a broken record. In late October, when we were very oversold, we had a DeMark 9, we had a support cycle, we had a super wide ribbon, just everything lined up there. We've held the ATR supports in all these time frames. By the way, this is a weighted ATR, average true range of 14. What that means is it gives it a little more weighting on the current bar. Normal ATRs are just everything's equivalent, so that makes this one just slightly special. Little DeMark 13 on the half day, just something to be aware of. But markets haven't been pulling back really much on these DeMarks lately, so that's just something to note. The ATR is your current support. Next, image number 21. This is an educational slide that I had last week. I meant to take it out, but it's an education on the cycle indicator. We had this set up on the 78-minute S&P and Qs where price was ping-ponging between support and resistance. And I stated when you see it doing that perfectly, that actually should get you excited because you could then buy the breakout when it breaks through the resistance cycle for a long or if it breaks through the support cycle for a short because it tends to signal a wave 3. So that's an example on the SPY 1 hour time frame. Ping pong, and then finally busted through here. You go long in here with a stop. Next, chart number 22. Here's a 60-minute view. Again, look at that up move from the late October lows, all these open gaps. We had a lot of sideways movement there in late November, early December, and then we busted up here. Going sideways again, is it forming a little bull flag or not with another pop? We'll see. Next, chart number 23, here's a 15-minute view. You can see we were getting parabolic in the short term, unsustainable. We've been consolidating. We have a coil here trying to break up a little bit late Friday, but we'll see if we can make another high here or not. If we do make another high, we'll have a MACD divergence here. Notice how the MACD is set up, or has recycled back to 0. Next, moving on to the triple Qs, chart number 24, weekly view of the Qs. Again, just a beautiful chart. You can see the broken trend line back there in, January. And this wave count that have been shown, the very bullish count, 1, 2, 1, 2, 3, 4, where this is wave 3 of the main count. If this is correct, then, once this wave 3 ends, then you're going to have a wave 4 pullback. This will be a 4, then you still have another move up in a 5. So if that's the correct count, that would mean a lot higher prices. But short term, we're getting close. This wave 3 could end sometime soon. That's why I think sometime in early 2023, we'll have a little better ABC type correction. But you can see everything lined up here. You had a 3-wave pullback, for that potential wave 4, moving average ribbon constricted, just textbook stuff. Next, let's go ahead and move on. Item image number 25, here's the daily view of the triple Qs. Again, it's interesting on that pullback in late October. And I know one thing that bothered me at the time was it didn't pull back and at least tag its 200-day moving average, but hey, it is what it is. It got close enough for government work, I guess, and then launched ever since. Now, I will say this, guys, in the short term, well, actually, this MACD divergence is getting close to being negated. It still technically is here, so you definitely want to monitor this, but if this continues to go up, this divergence will be negated. So again, that's what happens with divergence sometimes, is it's simply negated. That's why it's not a sell signal on its own. Next, chart 26, here's a half-day chart. Now here, again, I've been talking about this MACD divergence. Like I said, it's not a sell, but this is clearly some sort of wave 5. So once this ends, then I'm expecting some sort of ABC pullback here. And again, that would be good for the market just to work off some of this. You can see a slight RSI divergence here at the highs. Chart 27, here's the 60-minute view. Again, all we managed to have is a sideways ABC pullback there in early December, rallying up. Now we're consolidating again. Chart 28, here's a 30-minute chart. This shows a little symmetry. That last pullback was basically a symmetry move, very similar to this pullback here. Could be wedging here, perhaps. Next, chart 29, here's the KISS trend system. So KISS system went long there, a couple days off the lows. Excellent entry. All these smart trailing stops. 390 is the current one. Awesome. Next, chart 30, here's the 4 time frames. One thing that concerns me in the short term here is this half-day chart, guys. So here's the cycle indicator. I've discussed how this works before. You break through the cycle, that signals a wave 3, and this was clearly a wave 3. Then the support cycle was a wave 4, and this end of bull cycle is guessing at a wave 5. That doesn't mean it ends here, but it's a possibility, and you have a DeMark 13. So price is struggling for now at the bull cycle here, so be aware of that. And that does it for the major indexes, guys. We'll see what happens early this week. Let's look at some of these indicators. Chart 31, here's the VIX. The VIX concerns me as well short term. If you look here, these Bollinger Bands are pinching. So a bigger move's coming. Again, you might say maybe the move is down, and that's possible. What you could see is maybe a fake out where it moves down and then suddenly reverses. Okay, I've seen that happen. So be aware of that. Bollinger Bands are pinching. So the VIX is getting closer to a bigger move here. You also have some RSI divergence. Chart 32, here's a 2-hour chart. I pointed out this wedge back in October, and it's played out. When a wedge broke, the market, started that mega rally. Here we're in this little channel to monitor some MACD divergence at the moment. But, it needs to trigger. If it gets out of this channel, that will have my attention. Next, chart 33, here's the CPC put call ratio. Just showing you where it is. It's now at 0.77. Remember, this measures the puts to the calls. So we are getting quite complacent here. Not surprising with the market at some of these indexes at all-time highs, and given the rally we've had. Again, it can go lower. It is approaching this lower Bollinger Bands. By the way, this is a 200 length Bollinger Band, so it doesn't get out of these bands very often, but it's getting close to the bottom. Chart 34, here's another chart. This just has the standard 22 for the Bollinger Bands. And again, it's not there, but it's getting down there, so if it gets much lower here, that'll be a short-term maybe warning. Next, chart 35, here's another chart. Again, these divergences are not sell signals on their own, but you definitely want to watch them. This is the percentage of stocks in the S&P 500 that are trading above their 20-day moving average. You can see we have higher highs in the S&P here, lower highs on this. So again, something to monitor. Next, chart 36, just some of our trending systems like this, the 9 EMA crossover system for the NYSI. Beautiful signals all year long, as you can see. Chart 37, Here's another chart to watch. This is should have moved this above. This is another divergence, the NYAD indicator. Notice this divergence here. Higher high in the S&P. This is pulling back, lower high. So this also has my attention greatly. That's why I think there is potential maybe for a pullback for a couple days here before Christmas, perhaps, just with these divergences. Finally, chapter 38, again, if you're a subscriber, you're using our newsletters, the big benefit being a subscriber is we give you the live chart URLs. So some of these systems we make, like this NYSI system, you can just click view live chart, pull it up, save it, bookmark it in your browser, check it a week or two from now, a month from now, versus relying on static images like this. That's a benefit, guys. All right. So again, clearly market is uptrending. Bulls have full control, but we do have some divergences there to monitor, like that NYAD divergence, etc. Next, chapter 39. Here's the high yield corporate. Market follows high yield corporate. They're very correlated together. Similar look here. You had a doji on the S&P on Thursday, and you had one on HYG. Little pullback on Friday. Same here. Next, chapter 40. Here's the S&P versus high yield corporate daily. This is why I say you want to watch them both. I mean, just look at the charts. They move together. Now, once in a while, divergences show up. You know, like here, you had actually a positive divergence where high yield corporate was stronger at the late October lows. S&P had a lower low. That played out. There's no divergence here at the moment, but you can see how they move together. That's why you want to look at both. Because if you start seeing a topping pattern on high yield corporate, then more than likely it'll end up pulling the S&P back eventually. Next, chapter 41, here's JNK 60-minute view. Now, for now, the 60-minute on JNK, or this is JNK, but it's the same as HYG. Apologize for that. I thought I had HYG, but it's the same thing. You do it, for now, this does have kind of a bull flag look to it. So, you know, maybe this pops again one more time. Something to watch. And chart 42, I did have high yield corporate. So here's high yield corporate again. HYG, J&K, they look identical as you can see. Kind of flagging for now. Next, chart 43, here's a yield curve type chart. It's not a traditional yield curve. It's the 10-year minus the 3-month. Same thing, but again, it is interesting how the yield curve, it's been declining again, and man, it has been negative since 2022. No signs of going back positive yet. But hey, market's been chugging along, economy's been chugging along, so whatever. But still, yield curve looks the same. Next, chart 44, here's the 10-year treasury yield. Again, I talked about this forming an intermediate top back in October around 5%. Remember, for this TNX chart divided by 10, so 49.97, that is 4.997%. Okay. But again, it dumped again last week after the FOMC here. Now firmly below the 200-day moving average, but you do have the 61.8 fib here, so it could be nearing the area for a bounce, perhaps. Chart 45, here's the inverse. That's the TLT 20-year bonds. Remember, this moves opposite of rates. So again, I got to toot my horn on this one. I pointed out this fifth wave low in late October. I said likely we have an intermediate bottom there that could send rates lower or bonds higher for the next year, and this has been playing out. Chart 46, moving back to the 10-year. Here's a monthly chart. Again, it shows the 10-year back to the early 80s. The 10-year treasury yield was in a secular bull market for 40 years. And obviously that is no longer the case after breaking this 35-year channel. Again, it's pulling back. It pulled back from that 5% area from the supply zone. But guys, do I expect rates to do this? No. What I expect is maybe something like, you know, soon get a little bounce, then another pullback, and then rally again. Let's extend this trend line. I expect it to stay above this extended trend line. Okay. Next, let's go ahead and move on to the market sectors here. We'll just cover, you know, a dozen of them or so quickly. Here's the XLK. Again, looks similar to the or the triple Qs. We still have a MACD divergence here that is still there for now. Again, two stocks make up almost 50% of this damn thing. Next, chart 48, XLC, communication sector, contains a lot of those big cap tech stocks. Kind of an expanded coil here. Chart 49, semiconductors. I think it was one of the strongest or the strongest ETF or sector last week. Clearly this flag is played out. Almost a one-to-one here. You could see the moving average ribbon was pinching on that. Just textbook. Big spinning top doji there on Friday. So, you know, I don't have a 60-minute chart here tonight, but if it breaks that, that could set up maybe a trigger for a pullback, at least to one of these short-term MAs. Price has been now above its upper Bollinger Bands 1, 2, 3, 4, 5 times. So that is long in the tooth, guys. Anytime you're above your upper Bollinger Bands for 5 consecutive days, you're due for some mean reversion. Let's see. Next. Chart 50, here's the banks. They've had a hell of a move since the October low. This nice move from this double bottom. This area here is basically a big thin zone. And you can see it's worked nicely higher up into here. Really no resistance in here until you get up into this range. Chart 51, here's the bank ETF, KBE, one of them anyway, that I put out back in November from this flag. Beautiful. It's played out. Chart 52, transports. Again, pretty much a straight up move. Very similar look to the Dow, right? We pointed out the bullish view here back in here in October, and then on this tight little coil pennant, which is played out. Chart 53, subcomponent of airlines, or transports, airlines. Guys, look at this move on airlines. And this is, airlines had 72 consecutive closes below its 9 EMA. I was stalking this for a major bottom there in October. We got it, and then we went long, I guess in early November there. We went long the ETF Jets, which I don't have in here tonight, but heck of a move. Again, that's an example of something that was very oversold. You had some divergence set up. And again, this divergence, notice it was there for a good month. That's why divergence is not a buy signal on its own. You need another trigger. But hell of a move off that low. It is now up around the 61.8 fib. That could be a logical area to start, consolidation. That's the master fib, I call it. Sounds like a master fib. Sounds like a rap guy. Anyway, chart 54, XBI, another nice move off these lows. I talked about it being a long off this higher low doji after the symmetry break. Chart 55, home builders, again, with those declining rates, home builders, real estate have had a rocket move, as you can imagine. Quite overbought short term, though. Chart 56, XLE Energy did bounce off this supply zone, or demand zone, I mean. Little consolidation on Friday. Too early to say if the low is in place there or bottom. We did have some MACD divergence. Chart 57, oil services on the weekly. Just want to show you how this is a chart from early this year. Price did stall at that around this supply zone, pulling back. This is your long-term uptrend line. So breaking this could set the next uptrend. And chart 58, here's the daily view of OIH. Bounced near that 61 fib. You had some RSI divergence there at that low. Chart 59, consumer staples area. Nice move up. Pulling back off the 200-day moving average, though, back below it. Chart 60, retail. Again, nice move up in retail. I guess a lot of you are shopping. Chart 61, industrials, new all-time highs. Moving average ribbon was pinching on that last major pullback. And the final one, chart 62, emerging markets. It was flagging here. Finally broke out last week. Little pullback on Friday. Honestly, still looks fine to me. All right, guys, that does it with that. Let's move on to commodities. Chart 63, DBC, that's the index. Here's some of the holdings. Again, it's a compilation of stuff. Definitely a lot of energy. So far, nice move off this demand zone. Again, I don't know if that's a bottom. No, we had a little RSI divergence there, but now we'll see what happens this week on nat gas or crude oil inventories. Chart 64, crude oil on the daily. Again, it's bounced off this demand zone. You can see the 5 waves. Is the wave 5 in? Could be. Too early to say. You don't have a MACD divergence here, so you did have some RSI divergence. But this was still a good area to attempt a long. Chart 65, natural gas, again, has been selling off for the last 8 weeks or so, breaking that channel. We formed a big doji hammer on the weekly now. That is something to pay attention to. Chart 66, here's natural gas daily. Again, it got quite oversold. I know some of you took a long last week. So far you got a mean reversion bounce here. ETFs are UNG and Boyle. They do honestly suck, but that's really the only ETFs you got. Next, chart 67, copper up 1.5% last week. You could see broke that weekly trend line, back tested it, held it essentially the last couple weeks. Chart 68, there's the daily. So there's your resistance right here. Again, you can see how price perfectly bounced off this long-term support. That was a great area to buy some copper. Chart 69, DBA, agriculture ETF. It's been pretty choppy here, quite honestly, the last 6 months. Right now, it could be forming some sort of coil pattern. Moving on, looking at crypto, chart 70, here's Bitcoin on the weekly, down about 4% for the week. Again, logically stalling around this 50% fib. We pointed out this fifth wave low last year, which has obviously played out nicely. Looking at some individual names, they've been rocking despite Bitcoin being down. Mara we put out as a long idea in mid-November off this coil. Could have bought around this range in the 10s. 80% move up since. Hope some of you caught that puppy. Now, short term, there's some divergence here in the RSI. So trail those stops up, maybe below the 9 EMA. Jarbert 872 Wolf, here's another crypto stock. Kind of a diamond pattern here forming. Good volume, one to watch if this breaks out or not. And finally, Jarbert 73 Riot, here's another one. This has been on the list since November off this trend line. Right now it's consolidating. Looks okay here if it can take out this resistance. I thought I had a trend line here, but again, you can see where it would be right there. Okay. Next, chart 74, US dollar. US dollar had a nice pullback from that double top in October. Lost the 200-day moving average. Pretty big bounce back on Friday. There is some MACD divergence here, but again, this trend line could be some resistance. Chart 75, Japanese yen. This is the weekly chart, up 1.9% for the week. As you can see, nice move off this double bottom. Chart 76, FXY, that's the tradable ETF. So that's what I've been long personally. So far, nice move off the lows. I'm not going to discuss this chart. Let's move on. Moving on to precious metals. Chart 70, here's gold. So gold, a few weeks ago had that blow off move to 2150. When I saw that on a Sunday night, I'm like, man, gold is done for a little bit because it needed to work that off. And that's what's been happening. And gold had, almost a 200-point pullback, 190-point pullback after that. It's rallying up here. Now, my question here is, was this a wave? Is this a wave B and it's still got to come down in a C? We'll see. There's many different ways to look at this count. The super bullish view would be a nested 1 2 1 2. If it's that though, it can't go below this last low. If it goes below that, then this 1 2 1 2 would be negated. So we'll see. But the stocks have been leading here, so that's a positive. Chart 79, here's a 60-minute chart. Late last Thursday, this kind of had a flag look to it last Wednesday, but it's pulling back quite a bit more here. Again, now we'll see if we can form a higher low here or not, or if this is just a lower high wave B. Chart 80, there's a monthly view. This would be your very bullish count long term. Again, we broke out of resistance briefly, before pulling back because of that overshoot. Kind of blow off. Chart 81, here's the weekly. Gold up 1% for the week. Again, you can see the blow off move. I wish it had not went up that much on a Sunday and then went up a little more benignly and then held this. But hey, it is what it is. The ratio is leading here. That's a positive. So now we'll see, guys, if that longer term bullish count can play out or not. Next, chart 82, GDX. Again, you had a potential inverse head and shoulder pattern, higher to low. Really nice rally into late November. Big pullback, higher low after the FOMC. Again, the widest swing stop I'd have at this point would be this higher low at this point. Okay. Next, chart 83, there's a weekly view. Again, kind of a big coil setting up here, perhaps. Up 4.3% for the week. Next, chart 84, silver, down 0.9, about 1% on Friday. Last week on Wednesday, it bounced off this uptrend line in the middle of the pattern. This is your bigger overall pattern. And of course, chart 85, here's the monthly chart. Again, my main thing here is this coil. It's been forming for 4 years now. If you know about coils, energy is building. So when it eventually breaks this coil, we could have a monster move. If it breaks out of here, I think silver could be a major swing for, maybe a couple of years. So you want to watch that. Oh, and chart 86, this one got out of order, GDX daily. Remember, I had a daily above. Just the same thing, shows you the higher low there. We had a little double top on Thursday, because we had some follow through after the FOMC. Now we'll see if we can hold this gap or form another higher low. Okay. Next, chart 86, 2-hour view. Again, I was talking about this before the area rallied. We held that, basically filled that open gap. Big rally out of that channel. So on Wednesday, you could have triggered buying this break of this if you were watching. Chart 88, there's the 60-minute view. The pullback here still looks constructive. You had a little bit of increasing volume on Friday, but it still is fine. Okay. Next, chart 89, AEM, one of the major gold stocks. Again, I'm not going to go over a bunch of individuals tonight. A lot of them have this look to it, kind of similar to the S&P. Chart 90, MTA, doesn't look like GDX, but remember, this is one we went long back in October off this major long-term support, October, November, all around that 2.5 area. It's had a nice percentage move since. All right, final part of the newsletter, the other trade ideas. So first off, let's discuss some recent ideas, guys. Chart number 91, ATHA. Long idea from almost 3 weeks ago out of this horizontal rectangle pattern. What stood out to me was the pattern and the volume was picking up. So your long trigger was over this 175, 177 area. Could have put an initial stop, maybe below the 9 EMA. My target was up around the 200-day moving average. It's been hit. That's one hell of a percentage gain. If you bought a modest amount of shares, let's say you bought 1,000 shares, at $1.76, right? So $1,700. It rallied to 250, right? You would have made $800. That'd have paid for your subscription for over a year with a very, very, very modest trade size. Chart 92, Airbnb, long idea from almost a month ago out of this bull flag is obviously more than played out. Congrats. Chart 93, Rivian, nice move from that coil, nice pop late last week. Chart 94, Tesla, I put that out last week, finally breaking a trend line here on Thursday. If long, a wide stop could be just right below that 228 area, or maybe a little tighter up here on the 20-day moving average. Chart 95, AVGO, Broadcom. I pointed this out last week on Monday, Tuesday, and look at that straight up move. Now, again, it's above its upper Bollinger Bands 5 days. Do not chase it now. In fact, lock in some profits if you haven't done so. Chart 96, CTSH, another one I put out last Monday. I put it out last Tuesday, I guess, is a continuation over this candle. Very nice move. Again, move your stops up. Please take some profits. Chart 97, Nerds, coil setup from almost a month ago. Beautiful move. Chart 98, VTNR was a low risk little wedge. Again, pulling back on Friday, pretty good volume. Don't like seeing that, but it was a very nice percentage move from this trigger here up to here. Hope you took some good gains. Chart 99, Maxon was a new one I put out last Wednesday or Thursday. Slight trigger on Thursday or on Friday over this. You could see the volume really picking up. Nice little base forming here. Chart 108 was a long idea from a couple weeks ago. Nice move. Again, it hasn't hit its target. Doesn't mean it gets there, but it's a nice move. My style is to lock in at least half. Then I'll trail the rest up, maybe below the 9 EMA. Jarbor 101, Massey, long idea from November, over a month ago. Out of this rectangle pattern, initial target was 100, which was more than achieved. Just trail the stops up. Jarbor 102, BYON, it's played out beautifully. That's your last higher low now. Jarbor 103, FSR, one from late last week. I'm already long some of this. To me, hell of a sell-off here. Capitulatory volume. When you see volume pick up at the end, that's usually, the longs finally washing out, giving up. So now I want to see it break this trend line, but I am long some now. Jarbor 104, here's the 2-hour view. I like this little base forming. If it can break through here, I'm going to add to my position. Jarbor 105, Apollo, long idea from last week, finally broke out on Friday. Again, widest stop now I would put would be Thursday's lows. Jarbor 106, AMTX, one from last week. Pulled back. I'm going to watch to see if it can hold this trend line, especially these moving averages there. Some others, Jarbor 107, TAN, that's the solar ETF, trying to break through some resistance here. Good volume lately. Jarbor 108, Amazon, coil pattern that's been on the list, broke out of the pattern, as you know. My target's up around 160 to 165, by the way. Nice volume on Friday. Jarbor 109, Peloton, here's a new long. Clear resistance right here. So over this area, 670 would be a long. Jarbor 110, Irene, Iris Energy, bull flag, good volume, long over this trend line, target up here at $8. Jarbor 111, SPH, big move volume on Friday, so looking for maybe a continuation. Jarbor 112, KNSA, and nice little flag here, good volume. This is for my volume scan, these ideas, guys. That's where I get my ideas primarily. CVAC, breaking out on volume on Thursday, Friday. This is one to watch for some follow through or a pullback if it holds this trend line. Jarbor 114, Derm, nicely coiled, some sort of pharmaceutical stop, maybe some sort of skin thing, I don't know, dermatology. Jarbor 115, ABAT, American Battery, nice base, good volume, breaking. Possible target could be up here around 670. That's a good percentage move. Jarbor 116, AMLI, another new one, breaking out on good volume of a coil on Friday. Either go long over Friday's highs or maybe on a little pullback to the trend line there. And the final chart, chart number 117. Again, big volume break on Friday out of this base. This would be more like a momentum play. If it can take out this high, maybe get another pop. All right, guys, that'll do it. Again, hope you're joining your Sunday. Thank you for all your support. Happy holidays. And looking forward to all the systems and everything next year. And that's it. Take care, everyone. Thank you.